Good morning and welcome to the AFENTRA PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives in the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. And I'd now like to hand you over to Paul McDade, CEO. Good morning, sir.
Good morning, everyone, and thank you for taking the time to join us for this brief presentation. Given the announcement this morning of both the Azule deal and the amendment to the Sonangol transaction, we thought it worthwhile to walk through each transaction and why we think this is very positive news for AFENTRA, despite the necessity under AIM for a suspension of the shares. I'll walk through the slides and we'll be then happy to take questions which can be submitted. The disclaimer I'll leave to read at your leisure. Before I go into detail of today's announcement, I thought I would briefly reflect on the background to AFENTRA and the progress we've made for those less familiar with the company. The company was created from Sterling Energy and rebranded in May 21. So we've been around as AFENTRA for just over 2 years. The founders, myself, Ian and Anastasia, and our backgrounds are there. The vision for AFENTRA was to take advantage of the energy transition that's happening globally, but in particular in Africa, the combination of the industrial transition that's happening in our industry combined with the overall global energy transition. And really based on the founding principles you can see on the screen that we set out at our inception. We've made good progress over the last 2 years. We've established the AFENTRA brand and are now considered by most sellers as an important potential buyer for mature production in Africa. We are being recognised by the industry, by governments in the region and by capital providers as a responsible, well-governed buyer of these assets. We've screened numerous deals, pursued a select number of them, and we have successfully secured our third deal today. Upon completion of the deals we're talking about today, we will have production of around 6,000 barrels a day and 2P and 2C reserve and resources of around 50 million barrels. And we're also currently reviewing a number of other deals. So going on to the specifics for today, we've been working a strategy to try and secure a material equity in both blocks 305 and 305A offshore Angola. We see the combination of both blocks providing near-term cash flow and production upside, as well as medium-term development potential. Block 305A particularly will benefit from the substantial existing infrastructure that it will tie into in Block 305. So today we announced the successful outcome of this strategy with the signing of the Azule SPA and the amendment to the Sonangol transaction that we previously announced, which will result in us securing 30% in Block 305 and 21.3% in Block 305A. We have the debt financing in place to fund these transactions and will not require new equity, allowing us to acquire all 3 deals with no dilution to our shareholders. It's been challenging to coordinate the various deals, however, we think this effort has been worthwhile. We've reduced the partnership group from 7 down to 5, and those that remain within the partnership group are keen to invest and develop the potential of these substantial assets. So let me go through the terms of the deals announced on the next slide. As you know, the INA deal has completed, and I'll revisit the completion details on a later slide, as that demonstrates how accretive these deals are and the importance of the effective dates of the various deals. The Azule transaction will deliver 12% interest in Block 305, but equally importantly, we will acquire 16% in Block 305A. The Azule assets have been secured at an attractive consideration that combines firm consideration of $47.5 million for Block 305 and $1 million for Block 305A. Contingent payments for Block 305 on a sliding scale above $75 a barrel, up to $7 million per year for 3 years. And in the case of Block 305A, contingent payments of up to $15 million based on successful development of the material discoveries within this block. The deal benefits from an effective date of the 31st of October 2022, which will result in just over a year's cash flow positively impacting the payments when we complete in Q4 23. The Sonangol deal has been amended to now acquire 14% rather than the 20% previously agreed with Sonangol, with the firm and contingent considerations now being reduced on a pro rata basis to $56 million and up to $35 million over a 10-year period. It was necessary to agree this amendment to ensure full support for the Azule transaction. Let me explain in the next slide a little bit more detail the movement within Block 305. In effect, when you combine both deals announced today, you could consider that we have given up 6% of Block 305 in the Sonangol transaction to acquire 12% Block 305 in the Azule transaction. Therefore, we have laid out the firm and contingent considerations for Block 305 for each deal and then per point percentage equity in this table. You can see that whilst the firm consideration per percentage acquired in each transaction is similar, Azule being slightly lower, the Azule deal benefits from less onerous contingent considerations. So in the case of Azule, we are paying a sliding scale above $75, whereas in the Sonangol deal, we're paying a bullet payment above $65 per barrel. So definitely a strong preference towards the structure we've secured within the Azule deal. And then secondly, the Azule deal comes with a higher cost pool. And what that does is it effectively makes each barrel, the value of each barrel higher in the case of Azule. So we have a bigger cost pool to draw down and offset as we produce the barrels in the future. So in summary, I hope this table shows why we consider the Azule equity to be more attractive and therefore more positive for AFENTRA shareholders. Both deals benefit from an early effective date, April in the case of Sonangol and October 22 in the case of Azule, and these are important regarding the resulting completion payments. And if I just reflect on a slide that you will have seen before with regard to the INA completion, that will indicate the positive impact it does have. The effective date is an important aspect of these transactions. You can see in this slide that due to the elapsed period from the effective date of 30th September 21 to the completion of the ENA deal in May 23, the headline amount due of around 28.8 million was offset by 18.4 million of cash and volume of oil acquired, a very material reduction. When we complete the Sonangol and Azule deals, we will have an elapsed period of around a year and a half in the case of Sonangol and about a year in the case of Azule, which will also have a positive impact on the ultimate completion payments. These adjustments obviously are very positive and means that we will not require to draw down the full debt facilities that we have secured already with Trafigura and Mauritius Commercial Bank. So that's the structure of the deals that we're announcing today. Let me go on and just give you a brief update on how the actual underlying assets are performing. The assets have been performing well, and since joining the partnership formally through the INA completion, we've been much more involved in the ongoing and future work plans for both Block 305 and Block 305A. On Block 305, average production over the first half is averaged around 18,000 barrels a day, and uptime is gradually increasing, the second quarter performance being better than the first quarter. And more recently, we've had peak production days of over 20,000 barrels a day. The ongoing light workovers are having a positive impact on production and offsetting production decline, and water injection volumes are increasing, and the performance of the water injection system has been gradually improving. Looking more towards the kind of medium term, we are busy now looking at gas management and ESP installation opportunities. Both of these aspects are actively under review at the moment for Block 305. Turning to Block 305A, which we now, previously we had around 5%. We're now up to a much more material 21% at the completion of these deals. We're currently testing the Gazella discovery at around 1,200 barrels per day. That's not included in the previous production figures. And that is showing some positive and interesting information. The Punja and Kaku Gazella discoveries, located in Block 305A, are both fully appraised and contain around 300 million barrels of oil in place. Development studies are ongoing to find the optimum development plan for both discoveries. And we're looking at that through obviously a technical, commercial, but also an emissions lens and how we can use the development of these discoveries to reduce the gas emissions across the whole asset, including existing production. We remain very excited about the potential of both Block 305 and Block 305A with respect to both production and resource upside. So in summary, we've been making good, broad strategic progress. We have strongly established the AFENTRA brand. We have been building on our existing relationships in the region, across the industry and the capital markets. We consider that we've taken a disciplined approach to deal making and secured attractive, accretive deals, as well as rejecting other deals that didn't meet our criteria. We remain in a robust financial position to complete the 2 deals announced today and invest in the assets and secure further accretive deals as we move forward with our screening process. And as we look to the next steps, we will be working over the summer to complete and submit the admission document by early Q4. That will be followed by a shareholder vote. And then we will move to swiftly secure government approval for both deals and complete both transactions in the 4th quarter of this year. Alongside this work in Angola, we've been screening other deals within Angola, but also more broadly up and down the margin in West Africa. So thank you for your time this morning. I'll pass over to Ben to see if there are any questions.
Paul, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. As you can see, we received some questions throughout today's presentation. Ben, if I could just hand over to you just to read out those questions to Paul where it's appropriate to do so, then what I'll do is I'll pick up from you at the end.
Sure thing. Paul, you touched on it in the presentation, but could we just elaborate on the reason as to why there's been a reduced interest in the Sonangol acquisition?
Yeah, we've been in discussion with Sonangol and we were keen to acquire the Azule interests because the Sonangol deal, whilst attractive, didn't bring any of Block 305A, whereas Azule gave us a material holding in 305A in addition to the Block 305. So in the end, in our discussions with Sonangol, who as operator were keen to keep a majority share of the block and be the higher equity holder, we agreed mutually to adjust the Sonangol transaction to 14%. And they were very much appreciative of us having that conversation and making that agreement to reduce the transaction. And therefore that they were very happy to support us in the Azule transaction.
Okay, thanks, Paul. And on a follow-on question on that, on a net basis, have we lost or gained money regarding the deferred payments from the backstop dates on both the Sonangol acquisition against the Azule acquisition?
Yeah, and in terms of the effective dates and the completion payments, I think that's why it's worth going into. There's going to be a bit of a further delay on the Sonangol transaction. That effective date, we're still generating cash. We were able to secure quite an early effective date for the Azule transaction, so it benefits from a date of October, which is quite early given we're unlikely to complete this transaction until the end. So I think on the effective date, there's not too much in it. The reason we laid out the earlier table, when you look at the per percentage interest in Block 305A, you can see that due to the higher cost pool, and then particularly the contingent consideration, we're only paying Azule contingent payments above $75. And as you saw, it's on a sliding scale, so we only pay it incrementally. And for them to get their full payment, oil price needs to be 120. Whereas on the Sonangol deal, we secured what we thought was a good deal, but it wasn't quite the same as the Azule. And what we have to do in the Sonangol deal is pay a bullet payment of what was $5 million in the event that oil prices are above 65. That will now reduce to 3.5 million per annum. So we kind of think there's a little bit of a loss, you could argue, on the effective date, but it's quite minor. But I think the cost pool and the contingent consideration far outweigh that impact of the effective date.
We've had a few questions on levels of confidence about closing on Sonangol, bearing in mind that there's been a 15-month delay since announcing it. Do you want to just touch on some of the CPs that had to be delivered, and your outlook on closing out in the coming months?
Yeah, I know it's a good question. I mean, obviously, the main reason we were able to complete the ENA deal because we structured it without making the license extension a CP. With the Sonangol deal, we made a big point of making the license extension a CP. That license extension took much longer than we anticipated because the partnership were negotiating quite hard with ANPG, the regulatory authority, to get improved fiscal terms. The license extension was approved, so that is now in place, which removed that CP. The fiscal terms have now all been agreed and are just in the process of being approved by the finance minister as well as others. So we will have the positive impact of those improved fiscal terms. So really, it was a combination of that. We were actually very close to getting approval for the Sonangol deal. And actually, it was ourselves that decided to delay that approval, because what we preferred to do was actually take the Azule deal and then modify the Sonangol deal. So that really, the cause of the delay now on the Sonangol deal for another couple of months is more of our making, rather than the ANPG were ready to provide that approval. But we, on balance, looking to the medium term rather than the very short term, feel that there's a lot more value creation by securing the Azule deal and making that modification to the Sonangol deal.
You mentioned the license extension. Are you able to provide more details about the new fiscal terms?
At this time, unfortunately, we can't, because until those terms are published formally by ANPG, they'll ultimately be gazetted once they go through their approval process. But I think when shareholders do see the improved terms, they will recognise that actually acquiring more of this asset and the positive cash flow that it throws off and the increased cash flow that we'll get through those positive terms is really beneficial.
Do the existing block partners have the right of first refusal?
No, there is a ROFO process, right, first refusal process, but that is in the past. Basically, that process has been completed, and the partners can't now preempt what we've already agreed under the SPAs and the amended Sonangol deal.
Are you able to touch on what the estimated net debt will be at completion in Q4?
We will guide at the time, because obviously at completion there'll be adjustments. As I pointed out with Ina, these adjustments are quite substantial. So therefore, we would rather wait till we get much closer to or at completion to really guide the financial structure at completion. But I think suffice to say, you know, the 110 million facility we have from Trafigura and Mauritius Commercial Bank far exceeds the sort of levels of drawdown we'll require. It will be substantially lower than that. And our cash balances at this time are more than enough. We're actually anticipating a crude sale, as we've indicated previously, around August, September of this year. And that's barrels we've already accrued from the ENA deal, and we're getting from the ENA production. So our financial position is strong. And again, I think when people see our end of year position with having completed all 3 deals, I think that will be a very positive outcome for shareholders.
In terms of the business development pipeline, are you able to give a flavour of what that looks like? Is it more deals like this, or are you looking at things of a larger scale?
I think, as I've said to most shareholders in the past, we tend to look at a broad range of deals, from ones, you know, similar in size and smaller than the Azule deal that we announced today, through to more material acquisitions. And we're currently looking at a range at the moment. So I think, you know, what we tend to do is we tend to screen a number of deals. We then actively pursue a lesser number, and then whichever we can proceed with, if it's accretive, if it's attractive to shareholders, then we'll pursue. And we don't tend to kind of only look at small deals or only look at large.
Great. Look, we've answered all the questions that we can that have been submitted, so I'll hand back to Sandra now.
Perfect. Thank you very much for that. I think you have addressed all those questions you can from investors. And of course, the company will review all the questions submitted today and will publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Paul, could I just ask you for a few closing comments?
Yes, thank you. And so thanks to everyone for taking the time to both attend and listen to the presentation this morning, and for submitting the questions. We very much appreciate shareholders' patience as we've gone through these various processes to secure the equity within the assets in Angola. But hopefully shareholders this morning will see from the 3rd deal that we've done and the material position we're about to secure, and the underlying performance of the asset, the time and effort and the patience will be well rewarded. So thank you very much.
Paul, thank you once again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of AFENTRA PLC, we'd like to thank you for attending today's presentation, and good morning to you all.